Welcome once again with one new question of accounting ratios for paper 2017 annual. So in this question, from the following information, calculate for both companies gross profit ratio, current ratio, stock turnover ratio and liquid ratio. So here the data of two different companies is given for X Limited and for Y Limited: sales, cost of sales, opening stock, closing stocks, other current assets, fixed assets, net worth, debts long term and current liabilities. So first of all, gross profit ratio. Gross profit ratio is equals to gross profit divided by net sales multiplied by 100. So first of all, we are going to calculate gross profit for both X and Y Limited. So sales minus cost of sales equals to gross profit. So 20,000 minus 20,000 is equals to gross profit for X Limited, and 40,000 minus 35,000 equals to gross profit for Y Limited. Calculation of gross profit is given here. So gross profit for X Limited is 600,000 and gross profit for Y Limited is 55,000. So the next thing which we need to calculate gross profit ratio is net sales, which is given in the question. For X Limited, sales is 20,000 and for Y Limited is 40,000. So simply just divide these two and multiply by 100. So gross profit ratio for X Limited is 23.81%. Here normally it is calculated in the form of percentage. So for X Limited it is 23.81 and for Y Limited it is 23.61. The next one is current ratio. Current ratio is equals to current assets divided by current liabilities. So current assets 760,000 plus 640,000. For X Limited it is 760,000 and for Y Limited it is 640,000. So but here this is other current assets. So to calculate current assets for X Limited and Y Limited is to add up the closing stock, because closing stock is the part of the calculation of current assets. So closing stock for X Limited is 500,000 and for Y Limited is 350,000, and other current assets are already given in the question, so just add up these two. So current assets for X Limited is 1260,000 and current assets for Y Limited is 990,000, and current liabilities are given in the question, the main question data. So X Limited current liabilities are 600,000 and Y Limited current liabilities are 665,000. So simply just divide these two. So for X Limited current ratio is 2.1:1 and for Y Limited current ratio is 1.49:1. The next one is stock turnover ratio. Stock turnover ratio is equals to cost of sales divided by average stock. So here in this question, opening stock and closing stock both are given. So simply just add up these two and divide the result by 2 and the result will be average stock. So average stock for X Limited is 400,000 and for Y Limited it is 312,500. And the next thing which we need is cost of sales. So cost of sales is already given in the question. For X Limited it is 19,20,000 and for Y Limited it is 16,35,000. So simply just divide these two and ratio. Stock turnover ratio for X Limited is 4.1:1 and stock turnover ratio for Y Limited is 5.232:1. And the next is liquid ratio. As we discussed many times, this ratio that it is equals to quick asset divided by current liabilities, or we can say liquid assets divided by current liabilities. Current liabilities are already given in the question, and liquid assets are equals to current assets minus stock minus prepaid expenses. So just simply there are no prepaid expenses, so simply just subtract this closing stock out of current assets, and remaining 760,000 and 640,000 are your liquid assets for X Limited and for Y Limited. So simply just divide these two with current liabilities, and ratio liquid ratio for X Limited is 1.27:1, and liquid ratio for Y Limited is 0.96:1, and current liabilities are already given in the question. So this was the question of 2017, and in coming videos more question will be discussed. So till then, stay safe, stay blessed, and take care of yourself.